Welcome to the Explainer. All right, let's just jump right in. We're looking at something today that is quietly, but absolutely fundamentally reshaping literally the largest asset class on the planet. We're talking about real estate 3.0. Now, you've probably heard a ton of buzz about blockchain and real estate, right? But today, we're cutting straight through the hype. We're going to look at the actual nuts and bolts foundation that makes this whole ecosystem tick. So, we have to start off by tackling a pretty tough question. Is tokenizing real estate enough? For the last few years, the industry has been, honestly, hyper-focused on this kind of popular misconception. The idea was that if you just take a property deed, drop it onto a blockchain, and mint a digital token, you've instantly revolutionized the market. But as you might guess, the reality is a whole lot more complex than that. There was a recent discussion with industry leaders from platforms like Blocksquare, Building Inc., Magma, and Bricken, and they hit the nail on the head with this quote. Ownership alone doesn't create a functioning market. I mean, sure, a digital token absolutely proves you own a fraction of an asset. It definitely opens doors to new ownership models. But sophisticated investors, they aren't just buying a token. They fundamentally need deep trust, absolute transparency, and rock-solid confidence before they're going to commit any serious capital. Section 1. The missing data layer. Bridging physical assets to financial markets. If a tokenized deed is really just the tip of the iceberg, what exactly is sitting beneath the surface? Well, it turns out there's this massive, highly complex web of information down there that's pretty much missing from the mainstream conversation. And this is the critical missing link if we actually want to connect physical brick-and-mortar buildings to fast-moving financial markets. This brings us to what we call the data layer. Think of it like this. It's the standardized, trustworthy digital infrastructure sitting right between the physical building and the financial markets. To truly bring this space into the modern era, we can't just digitize a piece of paper. We have to create a comprehensive digital representation, almost like a dynamic digital passport that tracks the entire life cycle of a building. Because, real estate is just wonderfully complex. A proper data layer goes way beyond the basics. We're talking about digitizing the actual materials used in construction, ongoing maintenance logs, equipment details, valuation histories, financial performance metrics, and even stuff like energy performance and future retrofit costs. By taking all this structured data and putting it on-chain right alongside the ownership token, we're massively lowering the risk for investors. And as a bonus, we make the lives of facility managers infinitely easier. Section 2. Standardizing real estate data, creating a common language. Because let's be honest, right now, the real estate industry severely lacks one. Buildings, local markets, and tokenization platforms are basically speaking completely different dialects, and that creates a massive amount of friction for global investors. To really grasp how severe this gap is, we just have to look at private real estate versus public capital markets. For decades, public markets have relied on highly standardized, machine-readable reporting frameworks. Think of systems like XBRL. In those public markets, one number means exactly one thing, and it's heavily audited. But private real estate, it often still operates like the Wild West. We're talking handshake deals, static PDFs, and totally subjective spreadsheets where one person's operating agreement looks literally nothing like another's. So what's the real-world consequence of all that chaos? A staggering 15%. According to UK case law, there's actually an acceptable margin of error of up to 10 to 15% between two professional appraisers looking at the exact same physical asset. Why? Simply because they're relying on completely subjective, wildly different, non-standardized data formats. I mean, think about it. You would never, ever see that kind of massive discrepancy in the valuation of a public stock. So to fix this, and to allow tokenized real estate to actually scale on a global level, we have to ditch the subjective opinions and implement 3 structured steps. Step 1, standardized data inputs. A rent roll in Tokyo needs to read exactly like a rent roll in New York. Step 2, apply third-party verification so we can actually trust the numbers we're looking at. And step 3, establish blockchain provenance. That means creating a permanent, immutable record of exactly how, when, and by whom that data was produced. Section 3. Enter the AI agents, the agentic economy in real estate. Now let's explore what happens when we introduce artificial intelligence into this newly structured, verified environment, because this is where the true power of the data layer really comes alive. And honestly, it is absolutely fascinating. I want you to just think about this question for a second. Can AI invest in real estate with bad data? We all know AI agents are going to be analyzing and interacting with tokenized properties very soon. But how could an AI agent possibly make a rational, accurate investment decision if the underlying property data it's looking at is incomplete, wildly inconsistent, or just completely outdated? Industry experts use this really simple but super powerful analogy. An AI agent can't buy you a pair of shoes if it doesn't know your shoe size. It's really that straightforward. If you feed an artificial intelligence incomplete or biased data, it's not just going to fail quietly, it's going to hallucinate and make some pretty wild miscalculations. For autonomous agents to operate safely and effectively in financial markets, absolute data completeness isn't just nice to have, it's mandatory. But once we actually do provide these agents with structured, verified data, look at what they'll be able to pull off. They're going to process vast amounts of property data at scale, totally bypassing the huge administrative burdens that drag down private markets today. They'll eliminate the information asymmetry between different property management systems. They'll even be able to recognize specific objects and equipment inside 3D scanned building environments. And perhaps most importantly, they'll be able to legally execute trades on your behalf using emerging smart contract standards, like ERC 826, which basically act as a secure on-chain ledger to track every single one of their delegated actions. Section 4, Data Precedes Liquidity, the Consequence of Structure. Okay, let's tackle the ultimate holy grail of tokenization, unlocking market liquidity. Everybody wants to know when tokenized real estate is going to trade like public stock. But as we're about to see, liquidity is highly misunderstood. We need to completely reframe the classic chicken or the egg paradox right now. Liquidity is a consequence. It is not a starting point. You can't just artificially manufacture liquidity by taking some opaque asset and slapping it onto a blockchain. True liquidity only happens naturally when an asset is fundamentally attractive, deeply transparent, and highly verifiable to sophisticated buyers. It's basically a domino effect, and we have to follow the chain reaction. It all kicks off with step 1, good data and disclosure. That deep level of transparency leads directly into step 2, de-risked assets. And once an asset is de-risked, we finally hit step 3, institutional comfort. Standardized, verified data is exactly what satisfies the super strict regulatory and cash reserve guidelines of major financial institutions. And it's only when those massive players feel comfortable stepping into the space that we achieve step 4, true scaled liquidity. That's what narrows the bid-ask spread and allows for actual seamless trading. Just look at how the data layer is literally collapsing the timeline of real estate valuation. Historically, private real estate went years, literal years, between infrequent third-party appraisals. Then, recently, that shifted to annual basic investor newsletters. But today, by combining affordable, heavy compute workflows and AI with the data layer, we can actually process standardized disclosure data on a monthly basis. And as this tech scales, we're rapidly moving toward instant, liquid price discovery. We are finally allowing private real estate to mirror the speed and efficiency of public markets. Which brings us to the end of our explainer. I want to leave you with a pretty provocative question to chew on. Is your real estate data ready for the agentic economy? It is well past time we look beyond just tokenized deeds on a screen and really focus on building that foundational data layer today. Because the future of real estate isn't just about digital ownership, it's about verifiable digital truth. Thanks so much for joining me on this deep dive. I really hope it brought some clarity to a pretty complex topic. Until next time, keep learning.